Hi, it's Robert Mendelson, Fractional CMO here in beautiful Montreal, welcoming you to another episode of the Fractional Pros Canada podcast. We're part of Fractional Pros Canada, the home for Canada's fractional community, and you can find us on Facebook. We bring you conversations about everything fractional that matters for fractional executives and businesses from coast to coast. Think of this as your go-to spot for real talk, practical wisdom, and strategies you can actually use, all without the corporate fluff and with plenty of Canadian content. Whether you're a fractional pro or a business in our great country of Canada and beyond, this conversation is for you. Grab your espresso and let's dive in. Welcome to the Fractional Pros Canada podcast. I'm your host and fractional CMO here in beautiful Montreal. And joining us today from just down the street in the Etobicoke area of Toronto is Victor Pazos. Is it Pazos or Pazos?
Pazos.
Pazos, okay. And Victor is a finance executive, the founder of VP Chartered Professional Accountant. After nearly 2 decades leading finance operations and major transformation initiatives, including as VP and controller, Victor now works with organizations navigating growth and change, helping them strengthen their controllership functions, modernize processes, and build the financial infrastructure that's needed to scale. Today's Fractional Pros Canada podcast is powered by YourCMO.ai. We are building agentic AI agents and workflows to help fractionals scale their impact. Learn more at YourCMO.ai. That's YORCMO.ai. Victor, welcome to the pod.
Thank you for having me, Robert. Happy to be here.
And we're going to start with a fun fact. So you are one of the few people that I've met that is not only living in Toronto, but is actually born in Toronto and has lived there your whole life.
Yes.
So tell me a little bit, as a Montrealer, in a city where, most people that I know in Toronto are not from Toronto originally. I know there's a lot of ex-Montrealers living there, for example. What's it like watching the city that Toronto is grow into, really the metropolis that it is today, while you're building your career there? Share with us some kind of observations of what that's like and what big changes you've seen.
Yeah, and it's funny. I was born in Toronto, but I lived outside of the core, so I didn't really get my first taste of the downtown core until it was probably more closer to my teenage years. But then even then, I thought it was quite the metropolis. But now looking back to what it was now to what it is today, obviously a lot more buildings, a lot more defined skyline. I remember visiting New York for the first time and being amazed at the skyline there, and comparing that to Toronto, which was basically nothing back then, to now. Toronto is getting up there, maybe not as quite as evolved as New York, but it's definitely starting to get up there with all this development that's been happening recently.
All right, so you mentioned that you've been taking some time recently to recharge and upskill after a very demanding run in the corporate world. You were recently the VP and controller at Hudson's Bay Company, HBC, where you navigated complex multi-billion-dollar acquisitions and restructurings. I can only imagine how draining that kind of responsibility and activity must be. And now you're pivoting to bring that enterprise level discipline to the fractional world. So you've gone from, managing global teams of 60 plus people to launching your own independent practice, becoming a solopreneur. How does the fractional life compare to the corporate VP life you've left behind so far?
Yeah, no, so I think the biggest difference for me is intentionality. And that corporate VP role, you're managing constant volume, like people, issues, deadlines, politics, and it's easy to get swept into 12-hour days without realizing it. And with fractional work, the pace, is still busy, but it's focused and high impact, and I can focus on the work that I'm uniquely good at, such as fixing processes, building systems, and modernizing finance, without the noise of a large organization. So, taking that time to decompress, upskilling in key areas, Python, and kind of refining or looking for ways to use Excel in a more advanced capability. Resetting my priorities really helped me step into this next chapter with much more clarity and balance.
And if we talk about kind of the intersection of the daily problems that you would be facing at an HBC versus the kind of problems that any size business faces on a daily basis, what's in that intersection set between the two? Where do they overlap, and what kind of problems, how many problems do you see that are the same in both worlds, regardless of business size? It's the same problems that most, if not all, businesses have at some point.
Yeah, no. So I think something that, I think is applicable equally in large organizations, small organizations is liquidity, right? And cash flow and managing that carefully, right? So with the smaller organizations, that liquidity is key because they're just starting to scale up. With HBC, they were managing liquidity towards the end because they were at the end of their life cycle. But that's where I see the intersection happen. So, understanding your numbers, obviously having a good system set up in place, especially for companies that are starting out, having a good infrastructure to capture their working capital, key line items like their receivables, their payables, inventory if they're an inventory business. That's all key to have visibility into that early, especially for your AP, because AP, is essentially a free source of financing for businesses that, may not have access to loans from financial institutions or large loans. So, taking full advantage of the payment terms that if you can get some from your vendors to be able to pace out your cash flows. And, a lot of the times your supplier base are your biggest supporters because if you're successful, then your business will be successful. And they'll usually be willing to work with you if they see a plan and you're communicating transparently to keep them apprised if there are any issues with being able to meet your obligations to them.
There's probably a few fractionals listening, not fractionals, but business leaders, business owners listening who are going like, yeah, Victor, sure. It's really easy when you're HBC to call up your vendors and say, hey, I need a few extra days to pay you. Is that okay? Versus me with my 5 or 10 or $20 million business calling up my vendors and saying, hey, I need a few extra days to pay. Kind of like not the same leverage. What do you think of that? What do you say to those business leaders?
Well, I think that's where I think if communicating it up front that you're going to have some cash flow issues is key. Obviously, you don't want to surprise your vendor community, especially if you're not a large player, don't have that kind of leverage. But I still believe that, ultimately your vendors are not out to really do anything to jeopardize your business, and they have as much vested interest in your success. And as long as they don't perceive that you're playing games and don't want to pay them, I think having that relationship and building it early on is key and critical so that when you do need to call in a favor like that, it's definitely easier for them to stomach that.
Yeah, I mean, I'll share from my own experience when I had a business back a few years ago, online business, doing in the $5 to $10 million range. There were times where I called up a couple vendors and said, hey, we need some help from you here. We were buying inventory from the US and selling it to the Canadian market in Canadian dollars. And when there were times where the currency exchange would suddenly shift, not in our favor, it made a big difference to the bottom line. And it was surprising every time that I would reach out to a vendor in the States and say, hey, this currency thing is going on. Can you give us a little extra discount to help compensate for that spread? Every time it was yes.
Yeah.
It was never a no. And I was shocked. I was like, and I know, I knew at the time that we were one of the smaller customers that they had, very small customers that they had, and yet they were still very willing to help us out. So,
Exactly.
message to business leaders: don't underestimate, even if you think you're small. Vendors do value your business, and it's worth a phone call at the very least.
Exactly. And I think most vendors see a long-term relationship. If they can help out their customer, then that will lead to more business and even referrals to other potential customers as well. So it's a
Yeah,
long-term
yeah.
good partnership that can't be underestimated and should be leveraged more, if not already.
Yeah, that's a good point. Vendors do recognize the value of a long-term business relationship, and they're ready to invest what they can in it to help you out.
Yeah.
So You spent 7 years at HBC, you eventually became VP controller. You were there during a time of massive transition. There was a time where you were dealing with a $2.7 billion acquisition of Neiman Marcus, which I imagine resulted in a lot of restructuring. A lot of startup founders think that their chaos is unique, but you've seen chaos at $1 billion scale with a lot more zeros. What's the biggest lesson that you learned about keeping the lights on, as they say, during a crisis at HBC that would apply to even a small startup that's trying to survive right now?
Well, I think going back to my earlier point, the biggest lesson in a crisis is liquidity. Always making sure that you have enough liquidity on hand to weather the storm, whether that's a downturn in the economy that happens at the same time as this chaos is going around, or even just to have the capabilities to invest in the right areas to be able to deal with the chaos. Because a lot of the chaos, there's a lot of changes that have to happen, a lot of systems that have to now align and mesh together, a lot of operational processes that have to now change or converge, and perhaps some operational people decisions that have to be made to either hire additional people or restructure things out. So you need that liquidity buffer to be able to operate and pivot to whatever direction you need to go. And having that liquidity up front definitely is critical, and being proactive and planning, setting aside reserves so that when the bad times hit, then you're not surprised. And that's really what I would say be the key lesson from the HBC experience.
And of note, you said when the bad times hit, not if the bad times hit, because pretty much in every business, with very rare exception, it's a question of when, not if. So
Exactly. Every 10 years, the economy goes one way or the other, right? So definitely have to be ready for that at least.
So you also have a deep background in what I'll call the plumbing of finance. You've led ERP implementations of the big guys, Oracle, Workday. You've consolidated payroll systems for thousands of employees. When you look at a typical SMB or a startup today, what is the most common plumbing mistake you think they're making that's going to cost them and that they're going to have to fix later? What can you take away from your experience at the big scale level and give some heads up tips to the smaller scale businesses?
Sure. Yeah, so I mean, I think the biggest sort of misconception I see or mistake is people assuming that the ERP is the process when it really isn't. I think it's the endpoint. You know, as most SMEs grow fast, their processes evolve, but the plumbing around the ERP may not get updated. People could still be on an old QuickBooks version even 10 years down the road. So when, companies finally do upgrade their systems, the upstream data can be outdated or inconsistent, or it could be structured around, say, a chart of accounts that was designed when the business was a lot smaller and not at the scale it is today. So then in that kind of scenario, the implementations become 5 times harder because now you're forced to build sort of translation tables or manual workarounds and cleansing steps that really shouldn't have existed if you took a more proactive approach. So the irony is you're fixing legacy processes early. Fixing them earlier is far cheaper than trying to map them into a modern solution later on.
Wow, that sounds so simple.
It is, but it takes a long-term view to it, right? Sometimes, you get change, new people come on board, they want to bring in a shiny new tool and an object, and they don't look at it from a holistic perspective of what needs to change around it. Again, the ERP is sort of the receiving endpoint of all the stuff that happens around it, whether a business has their POS system or has a payroll system or has some other tool that's operational that needs to somehow fit into the solution. It's a lot.
Now, when we spoke a while back, you were very humble. You mentioned you felt you had a gap in fundraising experience compared to some startup CFOs because you haven't been on the front lines of pitching VCs every day. But you have done a massive amount of due diligence, bond offerings. You've carved out financial statements for spinoffs. So still a lot of activities are very relevant to the startup world and the young businesses world. So I want to challenge that gap idea. Do you think founders sometimes overvalue the fundraiser CFO and undervalue the controller CFO who actually ensures that the business model is profitable and that the data is accurate?
I mean, it's not, I know, especially in early stage businesses, fundraising is more important because you do need to be able to raise capital, whether that's loans or equity. So it's definitely important, but the controllership is the foundation, I think, and that's equally important. So the two have a role to play, but I think you kind of have to do it in the proper sequence. The controller skill set can build a proper foundation, a good set of books. You can track the business, in a way that you can tell the story that makes, fundraising even more likely to be successful, right? Because a lot of times to be able to fundraise, you need a strong set of books. You need to be able to tell the story of what happened to the business, the trends, and having clean data type processes and reliable reporting. That's critical foundation that is needed to be able to tell such a good story to then be more likely to raise the capital that you're looking for. So they're not in conflict. I think that just controllership has to come before the fundraising.
And telling the story is often what ultimately was going to make or break in the presentation. Whoever you're giving it to, the better story you can tell, the more successful you're going to be. And hopefully that story is rooted in solid financials, and you're not making stuff up, and you're not getting too creative. And because there's ways, right? There's always spin. There's ways to tell a good story, even if the financials are not great. There's still a way to present it as having, what would it be? We're here now, but we have great potential going forward, stuff like that. We hear a lot of that. Any experience that you've had or that you've seen where, a business doesn't necessarily have the best financials, but they can still figure out how to tell a really good story about it?
I mean, haven't any direct experience, but I think having the data to be able to feed into a good sort of forecasting process definitely helps to bridge the gap where, if you have the visibility to see where exactly, you're falling short, whether it's something in your unit economics, your pricing or whatever, then, you can see that and then you can formulate a plan to say, okay, yes, we're not currently meeting the targets now, but this is the plan to be able to alleviate that. And here's the data to support why we believe that's the problem. And what are we going to do to now execute on the plan to get us back on track? So again, having that data is key to be able to provide data informed reasons why your strategy needs to improve and how you're going to improve it.
You were sharing with me that you're currently working with a much smaller client than an HBC, a local business owner, in fact,
Yeah.
and helping them doing bookkeeping and setup and that kind of thing, which is a huge shift from what you were doing, managing a team,
Yeah.
overseas and across North America. What's been the most refreshing part of rolling up your sleeves and doing the hands-on work?
What I think is most refreshing and what I enjoy the most is seeing the immediate impact of the work that I'm doing. So in enterprise roles, you're usually leading through layers. You don't always see the result of your work right away. So with a small business owner like the one I was working with, you can build something from scratch, implement a workflow, a piece of software, and you can instantly see how much easier the life becomes. That was when I helped them implement the payroll, something that was taking, maybe half an hour or to an hour in Excel now, takes 10 minutes, and even the business owner can do it himself. He doesn't even need to pay me to do it. So, and that was something that he acknowledged and was really happy with. So it really reminds you, why clean processes matter. And no matter the size of the company, being able to implement these processes, whether automated solutions or just through other means, really you see the difference right away, and that makes you feel good. And it's expanded my range too. And now I can operate at enterprise scale, but I can also deliver value in very hands-on, practical ways to the smaller business community.
Kind of speaks to the value of kind of back to basics. Get the basics for the right foundation in place before you start building the house.
Exactly. You can help set that up. so that they're set up for success down the road.
So let's talk about your technical skills a little bit. You mentioned already you got a strong background in data, SQL, Python. For a business owner who's drowning in spreadsheets these days, does digital transformation require $1 million budget, or can they start small? And how does AI affect all of that now, of course?
Yeah, no, digital transformation doesn't require $1 million budget, not anymore. I mean, some of the biggest wins that I've seen came from free or low cost tools like Python, SQL, even well-designed Excel automation through macros. That macros has been around a lot longer, but these tools can do, I've seen it do things like pulling data, reconciling files, generating reports, even sending out automated emails. Tasks that would require a human and probably take hours to do can now be done instantly without a human having to necessarily do it itself. Maybe just review it towards the end to make sure that it's nothing is inaccurate. But I think the key is to start small and pick one painful process and automate it. And then once the foundation is there you can scale up. And AI now with AI, definitely it's even made it even more feasible to build out these tools because a lot of the times you would need someone that has taken training or is a coder or a developer. Now, with Excel, you can even ask it, give you the parameters. I wanted to do this, and this is how the data is structured. And then AI or ChatGPT, as most people may use, can actually help you sort of troubleshoot a problem if you're not sure why you're getting a certain error or a certain result. So definitely AI has accelerated or democratized the ability to build these tools without having to necessarily involve external expertise.
Tell us a little bit about how you're using AI in both your daily life and in your professional life. What are you doing to kind of keep up with the latest, and where are you seeing it's adding the most value, especially taking over, I'll use it in quotes not to offend anybody, but the grunt work of accounting?
No, personally, I mean, I use it as a sounding board. I'll usually, put out my thoughts on something that I'm thinking about, and AI will give me what it thinks, and I always challenge it. Given my background, I'm an auditor from public accounting, so I always exercise skepticism and challenge it whenever it says something that doesn't make quite sense or don't agree with, and it kind of having that back and forth, really helps to solidify my thinking and how I think about things. From a work perspective, also, sometimes I'll like something, because you can easily Google things if you want to research something quickly. But, if I want to research a certain accounting standard, for example, say, okay, tell me what standards can help me with this situation that kind of, or that in this industry or in this area, and then it'll spit out certain I'll tell it, give me the sources as well so that it kind of gives me further reading that I can do because I don't obviously take the content that it gives me at face value because it can be wrong and it can hallucinate. So then I'll use that as a first step and then to do further research through primary sources. So it's a starting point that I use to at least help shape my ideas or at least help me with some research approach to a certain topic.
There's probably some listeners who are thinking, wow, Victor was with HBC right to the end. He must have seen some things, etc. Without divulging anything that would cross any lines. What would you say you take away from that experience of having been at the high levels of a big company that in the end just didn't make it? What kind of takeaways, what kind of lessons do you think other businesses can learn from what happened with HBC?
I would say, you know, it all goes back down to cash. Manage your cash with care and make sure you have visibility to, your working capital. That ultimately without cash doesn't matter. You can have a great P&L, but without the cash, it all doesn't matter. I would say just focus really and have a strategy that is focused, that you want, identify where you want to play in, what you want to do, and relentless focus, right? I think if a business tries to do too many things at once or is not clear on what it wants to be, then that distraction or that lack of focus can also derail a lot of well-laid plans. So I would say focus and a good liquidity are the two takeaways that I would say from having lived through a crisis.
And again, those are business foundational basics that would definitely apply to any size business, whether large or small or just starting out. So some great takeaways. Victor, final question, which we ask all our guests here on the Fractional Pros Canada pod, which is, if you could put one message on a billboard for business owners and fractionals to read every day as they drive by it on the highway of life, what would you be putting on that billboard?
Yeah, so I would say fix the plumbing, the clarity will follow.
Fix the plumbing and clarity will follow.
Yes. Yeah, exactly. Because it's all finance is all about the plumbing, as you so adequately put it. So being able to have the foundation, the plumbing is clean so that all the data information flows through it, can flow through smoothly and cleanly, then you'll have insights that will support your objectives, whether it's your strategy or whether you're trying to fundraise. The foundation is there and the plumbing has to be airtight and clean.
All right. Well, everybody go call the plumber. All right, Victor. Hey, thank you so much for taking the time and sharing with us today on the Fractional Pros Canada podcast. Really appreciate it.
No problem. Thank you for having me, Robert.
That's a wrap on another episode of the Fractional Pros Canada podcast. If you're a fractional professional based in Canada, we'd love to have you join us in the Fractional Pros Canada Facebook group, the home for Canada's fractional community. It's where Canadian fractional executives connect, share insights, and help each other succeed. Until next time, I'm Robert Mendelson, Fractional CMO. May your impact be full-time, even if your hours are fractional.